Okay, we had a pretty exciting week. CPI number released. Very mild improvement in that data, but yet a huge reaction to it. So let's take a look at the charts and try to say, is this a bottom or is this the bottom in the downtrend? So we're going to switch to chart. Start taking a look at the overall downtrend that's been in place all year. Going back, oops, what happened there? Going back here to the first of the year, all the way down to where we are today, this is our primary downtrend line. And as we can definitely see, we have made a bounce and we're coming up. We are not terribly far from that downtrend line. So the question is that going to be a reaction to or near that trend line, maybe break it and come back? You know, there's no answer to that today, but let's see what we know. So looking back in time, if we look back here, and this was the first rally off of some sort of a bottom up to that downtrend line. I'll move this over here. And then the second rally off the bottom, or off a bottom that was created, was here up to there. And of course, now we are here in this process. We are here at the moment. Question is, do we go to here and bounce down, or do we just keep going in the bull world? So we're going to get rid of that. Just taking a quick look at the most immediate run, the little bit of information that's created here. Of course, this was the day the CPI data was released, and Thursday, very strong run. Definitely broke a nice support and resistance level there, held it on Friday. And this down here is actually quite bullish. That is a fairly significant liquidity sweep below the June lows and below the, below the June lows, excuse me. And that is, of course, what has created the bullish run that we have seen so far. Now, what I've had on this chart for months and months now are two active patterns that are going on, and they do have lower targets yet that have not been reached. But of course, those targets can be invalidated simply by some more bullish price action. So the two targets that are on the chart are, one, the triangle you see here. The target for that triangle, you take the full height of the triangle where it starts right here. You copy that over to the breakout of the triangle, and you go down to the bottom. And this is the actual target for that triangle. The other one is a small head and shoulders, which is right here. And that target is this dotted line that is also taken off this breakout point, which is this dotted line here. It gets covered up by the target from the triangle when I put that in the right place. So I have placed this horizontal dotted line there for that head and shoulders target. Both of those are below. Both will very quickly be invalidated if we go too far with this bullish action. So the way to understand triangles here, when price action comes into a triangle, it will bounce back and forth with a series of higher highs and lower lows, which is usually a little bit confusing for the market. And once it breaks out of the triangle, like here is the breakout, there is often a retest back to that line that is created there, which could be before the apex of the triangle or even after the apex, which in this case, if that happens, here's your downtrend line. You could break above the downtrend line and reverse back down and continue. Now, we don't actually know what's going to happen, but looking at some of the pricing structure, I'd say there is a point right in this area here that is possible for price to get to pretty easily, especially with the momentum that is already created. And that, of course, we we have no idea if this will go straight up or if this will take days or weeks to accomplish. But assuming it follows this relative path, that would see somewhat over in this area here. And if that bearish case would continue, that could look something like that. Price may take that much time to create up there, breaking that downtrend line, providing some extra hope, and then continuing back down in the bearish case. So that's the bearish case for the existing patterns. If that doesn't happen, both patterns will simply be invalidated, and we will probably continue on a bullish run. So there are two bullish cases we can take a look at. First one is something like this, where if we come up, we break that downtrend line here, we come back for some type of a retest and continue on from there. And a second alternative is you break out of that, come back down to this ascending trend line that's been created, and then continue from there. All speculation, of course, but it is all possible. And so this is a key area that I'm watching for to see how well it holds. If it breaks through here very solidly and continues to stay up here, even in scenarios like this, then this is really a much more bullish case. If we come through and break back under, or never even make it past that, then the downtrend is more likely to continue. And that is what I think. Any ideas? Let me know. Talk to you later.